Markets follow their own clock. It follows a rhythm that repeats every single day. Here in this video, I am going to introduce market internal clock, which has been observed repeatedly in stock markets, especially in intraday. Now, what do I mean by internal clock is market has different phases of rapid price movement, dull price discovery, and then high energy moves at different phases of the day, which requires a trader's close attention. That is what we are going to discuss here in this video in detail with examples. Welcome back to this channel. Just before we continue, explore our homepage for more advanced trading videos. Now, let's walk through a trading day hour by hour, and I'll show you exactly how this clock works. The opening burst. This is from 9:15 to 9:45. So this is the time where the high or low of the day forms with the 50% probability. Initial strong fight between buyers and sellers often establishes a range, a market breakout from this first 30 minutes with 50% probability markets go in that direction. This is the initial price discovery process where the both buyers and sellers will be fighting, making this first 30 minutes very crucial and very volatile. So best action to do around this 9:15 to 9:45 30 minutes is that you better wait and understand this 30 minutes. In this nifty 15 minutes example, if you look at this first 2 15 minutes, there is a open high and straight away prices came down. Now what does it mean when there is a open high? It indicates there is a strong strength, and in order flow you could able to see strong sell orders on the left side, and prices have closed below this. All these things indicates sellers were able to control, and delta itself is 573. It's not very big, but it is okay. And next 15 minutes, what happened? We have a small green candle with a delta which is negative. So in this first 30 minutes, it gives you a direction. So this is the high for this day, and a breakout has happened later that we'll discuss in the next coming slide. And the next phase, we have the boost phase, which happens generally around 9:45 to 10:15. So this is where an initial breakout happens from the first 30 minutes, a trend continuation, or if at all sometimes reversal also happens, and high or low of the day occurs with a 75% probability. This is where the big players are making their stand, and much strong range will be formed here. If a breakout happens from this range, that is going to be more trustworthy than the first 30 minutes itself. This is best for optimal entries. If you have a entry and exit system on 5 minutes or 15 minutes, it will give you early entry possibilities for longs or short. So let's look at the example. There is a strong breakout from this previous 30 minutes, and if you focus here in this 30 minutes, despite of delta, despite of positive delta, prices have broken down downside with good selling imbalances. These yellow boxes, they represent strength from the seller side, whereas on right side you don't have much yellow boxes indicating buyers are not that strong but sellers are strong. And even in the next 30 minutes, it's the same thing. If you look at strong sell orders were there on the left side, prices have closed below the these strong orders. These 30 minutes indicated there is a fair possibility, 75% probability the prices will again further go downside. And in the next phase, what happens is the trending time. So this will be somewhere around 10:15 to 12. My sincere request to you is don't take this time as strict phases. Take this as a hypothetical scenarios. When you are there in the markets for so long, you will observe more or less markets behave in the similar fashion. So this is where the market really trends upside or downside, if at all there is going to be a breakout. So trend continuation happens from the breakout of first 30 minutes or the first 1 hour, and you will see 100% range extension. What does it mean is, if at all price breaks out from the first 1 hour on a low range, if first 1 hour range is a low range, you will see 100% of that uh, range being extended on the breakout side. And this is where slowly the big players starts profit booking. So they have big volumes, they have to exit their trades, or at least book most of their positions. And here the best thing you can do is try to be with these people, book profits. Coming to example, if you look at so there was no breakout around this point after first 1 hour, and then what happened, there was a slight pullback, and then prices have broken down somewhere around 11 o'clock candle, 15 minutes. So there was a breakout downside, and on the breakout, look at on the left side, there is a strong seller here, 465 seller against 37 buyer. So this is a again prices closing below it. It's a again strong indication sellers are trying to take control for the day. So if you look at the range itself has extended, so this is the first 1 hour up to this point, it's more than 100% we can say. And the downtrend itself has lasted up to 12 o'clock, so it doesn't necessarily have to be exactly 12 o'clock. So don't take this time by as a rule, because market itself doesn't have any kind of own mind. So it's the people, it's the big players who are punching the orders behind their trading desk. Those are the people who moves the markets. So what happens in the next phase, midday lull. So this is more like a sleepy phase of the market. So this happens generally anywhere between 12 to 2 o'clock. Maybe sometimes it might even start at 11:30 also, or it might even start at 1 o'clock also, but this is the approximate time. So this is where you will see volumes dropping, market consolidates, prices generally faces resistance and support around these levels, because the volumes have dropped and the big players have started already booking their profits. General, unless it is a strong momentum market, markets are going to face resistance. This is where you will see deeper pullbacks, or if at all any reversal has to happen, total reversal might happen. Big players generally step out, and generally these big players, they will be exchanging their positions with the retail traders start trying to catch the extremes. So here again, better to wait. Coming to this example, we can call this phase as a prices going into sideway market, volumes have dropped. So if you focus here in this 12 o'clock candle, what happened, there was a strong dumping here, 1.8k, but despite of dumping, you need to observe prices is closing above these big orders, 1.5k, 1.1k. So this is a clear indication some absorption is happening. Some passive buyers are coming in at the lower levels. At the same time, he had placed the aggressive order on the right side. These limit orders can be compared to a sponge. So a big sponge was there at the lower levels, and you pour some water, they keep on absorbing everything that is getting into. So these act as, unless these limit orders were taken out, prices won't go down. And the people who are selling at these low levels, they definitely have lesser selling power, because prices have already trended here. So so at the same time, lower levels candles has exhaustion on top, 62, 137, 329, 133. This indicates again buyers are appearing at the top levels. So this tells you at that point of time buyers are strong. So there could be a small pullback upside, and then it might continue its own direction also. So anything might happen. Let's look at what phase do we have next, the power hour. This power hour, as the name implies, if you look at again, this is the phase where again the sleepy traders again wake up, the big players start accumulating or distributing their positions again. So this generally happens from 2 to 3 o'clock. So volumes starts again increasing, open positions are closed, next day positions are opened, portfolio balancing is done. these market makers, all these people, they try to manage their inventory levels. If they are too short or too long, they try to manage their levels. And best thing again, intraday scalping opportunities will be better here, because this after the 2 o'clock, you have only 1.5 hour, so you don't have much time. If you are looking for some kind of trend or anything, you have a small amount of time to get in and get out. So here scalping opportunities are much better. Here there is no clear demarcation of this hour. Generally you will see as the price approaches 2 o'clock or 2:30, like that, you will see prices again waking up and making volatile moves in one direction. The next phase we have is the last leg. So this is the time where the big players open new positions again. They establish next day tone. So let's say if big players are bearish tomorrow, they try to enter short positions in the last 30 minutes or 45 minutes, and volatility will be strong again. It will be as good as the first 30 minutes. The better for btst orders, how does it look like is there will be sudden moves, and you will see some kind of unfinished business at the lower levels, like you are looking at this 423.81, and there is a good unfinished business. So on the next day, if at all a fair gap up or anything is there, prices tries to come to these levels. These
In market
spikes happen
profile,
in the
we
last
have something
45
called
minutes or
spikes. So
1 hour. These spikes, they give us next day how to trade the next day, right? So for all those videos, you can go through my homepage. If you find this video good, guys, you'll love what's coming up next. It's designed to further fine tune your trading skills. Don't miss that. Make sure to subscribe and turn on notification to stay sure. Thank you. Have a nice day, guys.